All right, cool. So now let's go over here. Let's talk trading. Let's talk about how a confirmation checklist is huge. Okay. So first thing, everybody always tells you, what do they tell you? They tell you to trade with the trend, right? Trade with the trend. The trend is your friend. Now we need to establish what trading with the trend is. And I usually like to look at the daily time frame because the daily time frame tells you what? The bigger picture. Okay. If we're looking at the 15-minute chart, what are we seeing? Right? We're seeing bullish candles, obviously, but on the daily chart, we could be seeing a what? This is technically, because we're honestly going through a shift in momentum, but if we went back 2-3 days or before the weekend, we'd be technically in a what? In a downtrend, okay? In a downtrend. Technically, this hasn't completed its higher high yet, so we're still technically in a downtrend, but once the higher low is completed, which I believe it's going to go to this area, we'll probably shoot back up. So the trend is your friend, guys. And I need you guys to understand this is huge. Okay. You always want to trade with the trend. Never go against the trend. Okay. You guys got to understand that it's like you want the market on your side. All right. There's already different types of probabilities. When you go into trading, you need to figure out who you're trading against. Who are you trading against? Write this down. These are our biggest enemies, okay? Not our enemies, but we are trading with the banks. A lot of people have no idea, but the banks are here to take our money in the markets. That's why only 1% of traders are profitable. Okay, who else are we trading with or trading against? Some people. Some people trade against what? We're trading against the brokers, okay? You guys understand that the market can legally, brokers are allowed to manipulate price 50 to 100 pips, sometimes even 200 pips a week when they're unregulated. What does that mean? That means the broker, when he sees that you're in a sell in this area, okay, when he sees you're in a sell, the broker is legally allowed to push and wick price one more time to a high in order to stop you out in your stop loss and then increase the spread and then push price down. You guys see that? You guys see, like, you see shit like this all the time. Anybody that ever happened to you guys where your stop loss gets hit? That ever happened to you guys? Drop a 777 if that happened to you. All right? Does that happen to you guys sometimes? Okay? It used to happen to me all the time. Okay? We're going to talk about a strategy, how to get rid of that. Okay? All the time. I hated that shit. You knew that it went in your direction, but your stop loss got hit. Okay? That's due to liquidity zones. It's due to the broker. Okay? We need to understand that's banks and brokers. Banks and brokers manipulate price. And the last person we're trading against is other traders. Other traders. Okay? Other retail. Better word is retail traders. Inexperienced traders. Other retail traders. Okay? Inexperienced traders. Okay? People that are not patient. Why am I saying that? It's because Forex takes in investing, takes the money out of the impatient into the patient. It's just a transfer of wealth, guys. Okay? So these are the three people we're trading against. We're first off trading against the retail trader who's trying to manipulate price. We're trading against the broker, and we're trading against the banks, right? This is why we need to make sure that the probabilities are always in our favor. Always. Because if you just see a setup and you're taking it because you think it looks good, okay, you're going to fuck up long term, okay? And honestly, this is why the IML services are here, right? This is why we recommend IML TV. Take some trades off IML TV. Take some trades off the harmonic scanner. Take some trades off Swipe Coin and Swipe Trades, right? They're going to help you. But you got to understand that if you want to be an independent trader, it's going to take some fucking time. Be here 90 to 100, be here 1 year from now. 1 year from now. Okay? Because most people quit. Okay? My mentors quit. My mentors' mentors quit. You know what I'm saying? It's crazy, right? But guess what? Now I'm making triple the money my mentor ever made. And my first mentor, I'm making 30 times more money than my first mentor ever made. Because I stayed consistent. I stayed here 1 year from now. And after a year, I realized, okay, cool, I can make a couple $1,000s a month trading. And then after another year, I was like, okay, cool. Now I can make more. I can make, instead of $1,000, $2,000 a month, I can make $4,000, $5,000, $6,000 trading in a month, right? So I saw that it was possible. Obviously, I was more gifted with building because I had more of a, I don't know, maybe an extroverted, or I feel like I have a passion towards helping people, but I always love trading just for the sole fact that it's easy for me to make money in it. So trading with the trend, we want to trade with the trend. Now you guys got to understand with every single market here, I'm going to be, if you already know this, stay patient because I'm going to give you guys even more nuggets. If you don't know this, watch it again because you might not understand it. But guys, you guys understand that everything in life is just market structure. Okay, do you guys understand that everything in life is just market structure? I'm gonna move over to the key levels. I'm gonna skip this, and we're gonna go straight into market structure. It's my favorite subject. Okay, this is market structure. So if we're in an uptrend, the market cannot move sideways. It cannot move fucking diagonally or whatever. It just goes up and down, right? Now, let me give you guys an example of market structure. Okay, Chris Terry calls it Elliott wave theory. We like to call it a bunch of different things, but understand, guys, if you understand that the market, all the market is filled with what? Impulse and correction moves. Impulse and correction, right? All we see the market really being is just impulse and corrections, right? Wyckoff theory, right? Wyckoff theory talks about this, right? Impulse and correction moves. The entire market, all it's based off of is impulse and correction moves. So your key, more than the real key to understanding, because I'm a position trader, to understanding how to make money long-term with trading is just to figure out when the shift in momentum is going to happen and when these impulse and correction moves are going to happen. Okay, I'll give you an example, like with USD JPY, we're looking at this right now. Look, we had an impulse correction, impulse correction, impulse correction. Inside these impulse and corrections, there's a bunch of impulse and correction moves and smaller uptrends and downtrends in between. But in the long term, what is it that we see? We see just big impulse and correction moves, right? Very, very big impulse and correction moves. I'm gonna make these a little thicker so you guys can see that, okay? Then we have what? We have higher high, higher low, higher high, higher low, higher high, uh-oh, higher high, look at this, higher high, higher low. This is a trending market because all we want to do is we want to make sure we're trading a trending market, not a consolidating market. Like I would never trade some bullshit like this, okay? Let me see if I can give you guys an example. Let me give you an example of bullshit. I don't think I would ever trade this bullshit right here because I just lose money. If I see USD JPY and I see this right here, it's bullshit, right? This is where people lose money, okay? Guessing, okay? People lose money here because all they're doing is trading in between these zones, right? That's small money. We want to trade something that is trending, okay? Something that is trending, it's going to give us what? It's going to give us more money, okay? So I'm going to give you guys something that is going to really help you long term, okay? Oil was a really good example. USD JPY might not be the best example. I called oil out as well for the sell earlier this week. You guys are probably in profit for that. But what happens at the end of a trend? That's what you need to understand. What happens? What happens at the end of a trend and beginning of a trend? That's what you need to ask yourself. What happens at the end of a trend and what happens at the beginning of the trend? So I can understand whether I'm at the beginning or whether I'm at the end of the trend. Okay, that is the key. And I don't think a lot of people understand that. They really don't. Because at the end of the trend, what are we going to see? We're going to see market exhaustion, okay? We're going to see exhaustion. Look at this. Higher high, higher low. Uh-oh. Uh-oh. What do we see here? My eye doesn't even need to mark this up anymore. We see what? We see higher, no, lower high. Higher low. Uh-oh. Lower high. Uh-oh. What does that tell you? That tells you that the market is being exhausted, okay? The market is exhausted. And guess what? If we zoom in right here a little bit more, the price is breaking through this zone. You can even see it, right? It's waking off that zone. So now we're experiencing a what? What are we experiencing when this happens? Almost a set of consolidation. You can see every trend. It ends just like this. In this area, we're seeing a form of consolidation. You see this? Where the market is just, it doesn't know where to go. Now, what can happen here, you can experience a what? A breakout, right? But there's no, if the market's no longer creating higher highs or higher lows. So what we're looking for is at the end of a trend, we are looking for a shift in momentum. This is what I'm looking for. This is what I trade. And this is honestly, you can find it in any single trending chart, okay? A shift in momentum, okay? What happened? What happened? It shifted. Uh-oh, higher low, lower low, lower low. This was obviously big news. Higher low, higher high, higher low, right? Lower low, lower low. This is the daily, guys. So you could tell, obviously, something happened in the US dollar this week that was very, very disruptive to the trend. Very disruptive to the trend. But do you guys see what it is that I'm saying? And this isn't the best example. USD JPY isn't the best example, but let's find someone that has a better example of this. Oil. Oh, oil. Perfect. Perfect. Guess what? Oil hit our take profit of 265 pips, then went all the way back up. Oil looks like a sell right now. So this might actually be good because I might be selling oil later tonight. This looks like a good trade. Okay, cool. Perfect. Let's go to oil. Daily charts. Oil. Impulse. Correction. Impulse. Correction. Okay. Uh-oh. What did we experience here? Shift in momentum. Okay. Shift in momentum. It went from creating higher lows and higher highs. Uh-oh. Higher high to lower low. A lower low. Look at this. The market should have never dropped below this area. Why did it do that? Why did it do that? It means there's a shift in momentum. This is what we're looking for at the end of a trend. And you know what we're looking for in the beginning of a trend? A retracement, okay? If there's this true shift in momentum, some people like to call it a retest, okay? I like to call it a correction. Impulse, a shift in momentum, which is another new impulse move for the downside, and then a correction. And usually around these corrections, they will occur around what? A fib level, Fibonacci retracement and extension level. That will go completely in what? It will go completely in the same zone that was the last previous low. Do you see that? You guys see that? Are you dropping 777? Drop some 777 if you guys understand that. You guys understand what it is that I'm saying? You guys understand? Okay. Pressure building up before the breakout. Exactly. Pressure building up. But you know what we like to call this? A shift in momentum. So because there's a shift in momentum occurring, right? People get scared. People freak the fuck out. Okay. This is what people try to do. This is what trend traders try to do. They try to catch the breakout. They try to catch the breakout. Okay. Let me be clear with you. You will never know where the market goes. And you will never, you can get lucky catching the breakout, but guess what? You're going to lose a lot of fucking money trying to do it. You're going to lose a lot of money. Okay, when I draw my fib levels, by the way, I draw them by the wick to the wick because it's still price, if anybody was asking. But think of it like this. If we see a shift in momentum, something similar to this, we can guarantee that this thing is going to correct. It has to. Some trends will not correct. It's okay. Don't chase the fucking trade. But if it's going to correct, on the correction before the second impulse move, the guaranteed money on this move is ridiculous. This trade right here, this is where we will call a sell. If I see the shift in momentum happening, I'm not going to tell my traders to catch a sell. I'm not going to tell them to do that. I'm going to tell my traders be patient, because most people what? Most retail traders, most people that don't know how to trade on the daily. Look, we're looking at the daily chart, so we're looking at thousands of pips. Okay, most people that don't know how to trade, they're going to see it going down on a downtrend. They're like, oh, they're going to fear. FOMO kicks in. Fear of missing out kicks in. So what happens? If fear of missing out kicks in, they tend to what? Sell. And when they're selling now, the fucking trend is going back up. Up. It's an uptrend now. It's an uptrend. We're still technically in an uptrend. No. We've created a lower low. So technically now this is considered a downtrend. This is what we're looking for, the shift in momentum. When there's a shift, there's always a what? Correction. Just like every single uptrend over here, there was an impulse move and a correction. We have a new impulse and correction. for the downside. Okay, this trade right here is the money trade. This is the money trade. If you can trade this right here and find the shift in momentum and find where the market is going to end its correction, this is where you can bet all your money on this fucking trade. This is how I've compounded accounts on one trade. I did it on Bitcoin, where I took $200 to $6,000 in like 2 days trading Bitcoin. 2 days, just 2 days. I was like, yo, you know what? Fuck it. Let me just drop a bunch of fucking 2.0s, 0.02s, 0.05s on this one because I see the shift happening, right? The shift of momentum has occurred. Price action has occurred, okay? So this is what I'm looking for. And my eye can see it. My eyes can see it. Most people's eyes cannot see this. They have to draw out the shifts because they don't know whether they're in an uptrend or a downtrend. They're just seeing ceilings and floors. Because they're seeing ceilings and floors, they believe that, oh, it's going to go up or it's going to go down. They'll tell you, oh, if it does this, do this. If it does this, it does this. I'm telling you where you can figure out exactly where the market is going to fucking head to. I'm not going to tell you or give you a guess. Okay, this is where market is heading to. Okay, so then what happened here? We had this right here. We usually have 3 impulses. Okay, with a trend, when you understand a trend, right, there's usually 3 to 5 impulses. This is also considered Elliott wave. Okay, Elliott wave theory. Okay, this is how Chris Terry traded. Okay, he traded off of Elliott wave theory, and Chris Terry trades off of harmonic theory. Okay, this is how Chris Terry trades. So now we have an impulse move, then we have a what? We have a correction. Okay, and where is this correction heading to? This is why I dumped the sell. This is why I told people sell oil the other week. Because what happened? What happened? We had a correction, and the correction took oil all the way up to the 71.8. Okay, the most important numbers in Fibonacci are what? Put this down. The most important numbers in Fibonacci are what? You guys don't know? 38.2, 50, 61.8, and I would say the 71.6. Nobody's going to tell you that. Nobody's going to tell you this is 71.6. Why? Why is nobody going to tell you that? Okay? Because what tends to happen is price will wick to the 61.8, and because it wicks to the 61.8, it'll wick to the 71.6. And this is where you get the poo-poo, right? What Jordan Morgan and all them teach at the trade house, how to get the sniper entries. It's at the 71.6. And the reason being is because, right, the broker knows your stop loss, okay? So on the lower time frame, the broker sees that you're trading oil. It sees that you're trading oil right here. It sees what it is that you see. It's like, okay, there's about 10,000 orders on a sell side for oil, and all their stop losses is right here. What we're going to do is we're going to spike oil up around a liquidity zone, maybe 50 to 100 pips, because we can manipulate it to that for the day, and then we're going to drop price, okay? And we're going to get all our bigger banks in the sell, okay? You guys gotta understand, the broker is not for you, he's against you, okay? The broker's not for you, he's against you. The broker owes you money, okay? Remember that. So they'll wick up price to 71.6 and then drop it, okay? This is why I'm never afraid. If I know that there has to be a correction to this big impulse move, or a big correction, right? There has to be a correction to this, even if we're technically on an uptrend or a downtrend, okay? There has to be a correction. Okay, always. Never forget about that. Okay, so this is important, guys. So now we have impulse move, correction, impulse move, massive correction, impulse move. And let me break this down real quick. So when I'm marking up a chart from scratch, because I'm going to mark this up completely from scratch, so you guys can see it, right? Remove all drawing tools. Cool. Let's mark it up from scratch, because this is what it is that people see. People are like, oh, well, technically we're still in an uptrend and it looks like a buy. But this to me looks just like a correction. So it looks like a sell. But I'm going to wait for a retracement in order to get a better sell zone and then potentially sell. So the first thing I'm looking for, guys, when I'm marking up a chart, I'm looking at the trend. This right here, market structure, okay, or reading the correction, impulse and correction moves, I can see that naturally. Some people can't see that. So that's why I spent 20 minutes of my time literally trying to break that down so you guys can understand, right? So let's break this down real quick. Okay, let's go on the daily. If I'm marking up charts, okay, cool. I'm marking it up. I'm going on the line chart. I'm using my line chart. Okay, I'm like looking for supply and demand zones. Zones where I see price favoring the most and honestly retesting and exiting, right? On the daily, right? Because the daily always tells us the bigger picture. Banks, hedge funds, they trade on dailies. They don't trade on the 1 hour. You know who trades on the 1 hour? Retail traders. Retail traders trade on the 1 hour because they understand that retail traders, they understand, listen, these newbies, these noobs, they're trading on the 1 hour because they don't understand how to actually trade, right? Trade correctly, right? Banks, hedge funds, they trade on daily. They're looking at long-term holds, okay? Why would you go on the hour? It's okay to go on the hour, don't get me wrong, but if you go on the hour, you're betting for, you're looking at 20 to 30 pips, but it could easily go in the opposite direction for 20 and 30 pips. This is how people lose money long term. I was one of them. Okay, I was one of those people. I understand. So what I'm marking up right here is first I'm making sure I trade with the trend. Second thing, I already established, okay, cool. This was one big uptrend. Now this came down, right? This downtrend, uptrend, downtrend. It looks like it could be a possible shift in momentum, but look at this. This is still respected, right? This zone. This is still respected this zone. So it looks like, honestly, oil, because it's still creating lower lows, looks like, you see this right here is just one big correction. It looks like it can have one more last correction go down here before it shoots back up. But honestly, that's what it is that I'm looking for. I also have to see divergence, have to see what price is saying, etc., and have to read Fibonacci news. But just from my understanding, we're technically still in a downtrend. Okay, key levels. I'm marking up supply and demand zones. I'm not marking up every single little piece of what's going on here, guys, right? But I'm marking up supply and demand zones to understand where price is heading to and understanding the key levels that are going to benefit me when it comes to entries. That's all I'm using that for. It's just entries. Okay, I can actually get rid of some of these, right? Some of these don't honestly matter. But I'm just trying to show you guys how I mark it up. Let me see if I can find some other key levels here. This is I go on the smaller time frame, use the line chart. All right. It's not going to be perfect, guys. It's honestly not. But you can see it, right? You can see it better on the line chart than you can on the candlestick chart. Look at 1, 2, price rejection, 3, 4, 5, 6, 7, price rejections, 8, 9, 10. Price has rejected the zone 10 times. So that means there's going to be a take profit area, most likely. I'm going to take profit around this area because there's going to be a massive what? Correction. Probably be a massive correction. Okay. So now we're looking at what? Key levels. We're looking at supply and demand zone. Now I'm looking at market structure. Okay, market structure. Let's break this down. Okay. We went from a long uptrend to a downtrend. Impulse correction, impulse correction, impulse, double top, impulse correction, impulse correction, impulse, double top, shift in momentum, impulse. There we go. You guys see what it is that I see? You guys see this, right? Shift in momentum, a lower trend within the trend. Okay, we were on an uptrend, impulse correction, impulse correction, impulse correction, impulse, lower low, shift in momentum, correction, lower low. That's how I see the market. You guys understand this? This is making sense. Drop a 777. This is making sense. You guys, this is making sense. This is making sense. I see the vibe. Okay, cool. While that's happening, we're up $400 on US 30. We're up another $400. Damn. Okay, cool. This is some advanced stuff, guys. So if you're not on IMLTV, isn't it like the breakout and retest method? To an extent, I don't really, not really, to be honest with you. It kind of is, but the thing is like this: when something breaks out, it won't retest. A lot of people are like, "Yo, if this breaks out, it's gonna retest the zone," but this never retested. This, when it broke out, it never retested. Maybe on the lower time frames it did, but for me, do you look for corrections on dailies? Yes, I look for the correction on the dailies, because the dailies in the 4 hour. Because why would I get into a trade where I am risking my money on the hour chart if I haven't seen where the bigger trend is going? Why would I do that? Does that logically make sense to you guys? Right? Why would I try to catch these pips right here, these pips right here, right? If I could see the whole bigger picture and I could see long term, we have a potential of catching, right? We have a potential of catching, let's see how much the short position would be. We have a potential of catching 200 something pips, 2,000 something pips, whatever they want. The amount 2,132. You know, why would I do that? So my biggest tip with this entire thing is I look at key levels, I look at market structure, and I learn price action. Okay? There is no good book to read on market structure that I can give to you guys, to be honest with you. Key levels is an IML Academy. Price action is learning how to read candlestick patterns. Okay? Pick up these two books, Naked Forex or Candlestick Bible. If you do not read these two books, you do not know how to trade. You will never know how to trade. I'm just being honest with you guys. You guys want me to be honest with you? You will never learn how to trade unless you understand these two books. You pick up these two books, Naked Forex and Candlestick Bible. Okay? This is something that they won't tell you. We have things that are being added to the academy right now, but price action is the best form of trading. The way I trade is based off of price action. When I see something like this, look at this. You see? Price action is telling you it can't break the zone because it's on this trend. This is price action. Look at this. Look at all the wicks. This is just liquidity zones. Look at all the wicks to this area. Bang, 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 bang. Right? Stopping people out because they know they're coming in to sell. Sell and then what? Correction. Right? Price tried to break its old ceiling, but it can't do it. Learning how to trade wicks is huge. Where can I get Naked Forex? Search it up on Facebook. Buy it on Amazon. It's literally 30 bucks. So now the next thing I'm going to be looking for is this thing that we like to call divergence. Okay, so I trade off of RSI. I use RSI 5. Okay, you guys can see my RSI here in the bottom. Okay, the relative strength index. All I'm looking for is a solid move. I'm looking for divergence. Okay, now on the lower, I might be able to find divergence in the lower time frame. Okay, cool. There's a little bit of divergence in the lower time frame. Maybe a little bit on the higher, actually. Yep, I'll lower. Okay, look at this. You see how divergence, how price is slowly on here on the 4 hour. It's slowly trending down. You see that? But over here, all the way from this area, price is trending upwards, then heads down, but to an extent, to the naked eye can't see this. The naked eye, because the naked eye assumes that what happened in the past is going to happen in the future, right? Market is trending up. I'm explaining it right now, man. Market is trending up. Look at this. From this area, the market is trending up. Okay? From this area right here, the market is trending up. And guess what? Market over here is trending down on the 4 hour. You guys see that? You see that right here? The market is trending down. The market has been trending down ever since this area. Why, when the market and the relative strength index, RSI 5, period 5, okay, I put this at period 5, right? Length 5, source close, okay? That's where you should put your settings. When I'm doing that, it's because I see that divergence is kicking in, okay? Market momentum is heading down, to be honest with you. But over here to the naked eye, it looks like the market is going up. It looks like it's trending upwards. You guys see that? You guys see that? Yes or no? Please give me some feedback. Yes or no? Yes or no? You guys see that? Yes or no? Yes, yes, yes. Okay. Well, if you don't see it, let me see if I can find another example. Right here, another example of divergence. Look at this. The market was heading down, right? We would have never been able to see this thing exist. We would have never been able to see this exist, right? Market is heading down. It's oversold. This is the perfect example of divergence, a shift, a major shift in momentum. Look at this. The market is heading up, okay? Why is it shifting upwards here? And why does the market look like it's still creating lower lows here? Why is that happening? Yeah, it's a fake out. It's like a fake out. Basically, it's like a fake out. Banks, okay? Banks are buying contracts right here. That's why there's a major shift going on. So if banks are buying contracts, why retail traders are selling? More retail traders are selling bank. They get stuck. Price moves up a couple thousand pips. Bang, kind of done for. The relative strength index measures market averages. That's all it does. It measures the market momentum and its averages. So that's why it's another confirmation for me to enter into a sell, okay? Because I see divergence in the market. There's divergence on the 4 hour and there's divergence on the 1 hour. Now, my biggest thing is this might head up before it drops. I want to see maybe a little bit more divergence. I've learned a lot from just experience on the chart and learning how price moves. So price action, pick that up, understand how to read divergence. And now let's look at economical news, okay? There's 3 different websites: MyFXbook, Forex Factory, and also investing.com that I use, okay? Now with Forex Factory, I'm going to look at news for the week, for oil, for the US dollar, even for the Japanese yen. There's not really that much news today, so not that much money. But tomorrow we have, Fed chairs, Powell speaks, what's going to happen. Been the big US news during the New York session. Due to delivery, open markets, an event hosted by the Federal Reserve Bank in Boston. Audience expected. More hawkish than expected than good for the currency. Wow, okay. Volatility is often experienced during his speeches as traders attempt to decipher interest rates cues. Short-term interest rates. He has more influence over people's nation's currency than any other person. This is huge. This is breakout news. Wow, this is crazy. We can check out the latest release. We can read up on what's going on right now. And what I would do is I would read all this shit. I'm not going to lie to you guys. I would read what's going on with the U.S. economy, what could possibly occur, and I would look it up on investing.com. This is what I do. This is literally, trading is not me just guessing. It's actually a lot of me doing research behind investing.com on what's going on right now with the feds and exactly people's outlook on what's going on because of this stuff, right? And I would read all this. All of it. This is so interesting. I'm about to save this, and after I get off this call, I would literally, I'm going to read all this stuff. But after that, another confirmation that I would look for to see if this could spike up, just to give us a fake out or something like that, because I know there's a lot of people that are probably trading oil right now. I would go to my FX book, I would go to community, and this is what people won't tell you. I'll go to Outlook, okay? And in Outlook, you can see the millions of dollars that are being traded within the foreign exchange currency and people that are connected to my FX book. So look at this, Euro USD. 15% of people are short on Euro USD. 85% of people are long. There's about 63,500 lots on Euro USD on retail traders. Isn't that crazy? 63,000 lots. That's millions of dollars being traded right now on Euro USD for long. And 15% of people are actually shorting it. So this is big, because understanding what retail traders are doing is a big concept, even USD CAD, right? Because USD CAD is what? An opposing pair. When oil tends to go down, USD CAD tends to what? Go up, right? USD CAD tends to go up. And look at this. Wow. USD CAD is going long. There's a bunch of people in a buy for USD CAD right now. What does that mean? If there's a bunch of people in a buy for USD CAD, that means oil is going to go down. Does anybody know why? Where do imports come into? They come into Canada before they come into the US. So when oil's price goes down, right? When oil's price goes down, US dollar over the Canadian dollar is going to go up, right? They're called inverse pairs. Are you guys learning something tonight? Are you guys learning? Keep me updated. We just hit $400, right? On our account. We're up another $400 for the day. Are you guys learning something? Yes or no? Okay, cool. Real accounts only. Another $400. Wow. US 30 is dropping its panties. Wow. Let's go. I'm up another $80. Holy shit. Okay, cool. So, appreciate you guys. Do this for y'all. So now let's go down. Let's see how many people are shorting oil. Just because I'm curious. Let's see this. There's oil US 30. There's a bunch of people in the shorter. That's dope. Can I find oil here? I don't know if I skipped it, guys. If I skipped crude oil, just let me know. I might have to check another site. Okay. Crude oil. Sorry, guys. My neck is fucking killing me. Oh my god. I think I fucked up my rotator cuff, guys. I can't find oil right now. But if I was here and I was going to spend a bunch of time marking up a chart, it takes me 20 to 25 minutes. Okay. I would be reading this stuff. I would look for oil either on this site or another site. You can use finfizz.com. Finfizz as well. It's very good when it comes to measuring the strength of a currency or whatever it is that you're doing, right? AUD dollar is weak for the week. Is very weak. The Australian dollar is weak for the week. Oh, that's a tongue twister. The Australian dollar is weak for the week. That's a tongue twister. Shit. But yeah, let's figure this out, guys. So one thing that I would look for is, like I said, if I really predict it's going to go down, it's because also oil, USD CAD is predicted to be a buy for the week. USD CAD is predicted to be a buy for the week. If USD CAD is predicted to be a buy for the week, there's a bunch of people in the setup that see USD CAD as a buy for the week. That's further confirmation that US oil is going to drop. Now, how far is it going to drop? We're going to figure that out right now. So we looked at RSI. We looked at fundamentals. Okay, COT reports. That's the last thing you're going to hear me say about that. Okay, unless you're an advanced trader, message me about that. You will never understand what I'm talking about unless you're an advanced trader and unless you don't know the basics of this stuff. Okay, but if I was looking at the GBP pairs, I would be looking up GBP pairs and what other inverse and conversing pairs are doing. Check market liquidity zones, stop hunts. Okay, this is the last thing I always talk about when I'm looking at a chart. Okay, look at this. Do you guys understand that when we marked this up, when I was going in for a sell for crude oil, you guys understand that when I marked this up, I saw it hit the 61.8. Do you know how many other traders saw this? They saw a ceiling and they're like, oh, it's not going to break the ceiling. This is why retests and breakout traders don't work. Okay, I'm going to show you guys why breakout and retest stuff doesn't work. All right, it doesn't work. It never works, and this is why it doesn't work. Watch. So when a trader sees this, 61.8, do you know how many people were shorting? When they see something like this, they're like, oh, it's not breaking out. We got to get into a sell. They're going to get into a sell, and guess what happens? Uh-oh, price tends to break out. It hits their stop loss. They're like, oh, it created a new ceiling. It created a new ceiling. Uh-oh, breakout, retest. It never retested. It just blew their fucking account and dropped. This is the 4-hour chart. You guys see this? You guys see this? Yes or no? Yes or no? Okay. So there's a reason why I don't always, I do look at a retest, but I don't solely trade off of the retest and the breakout because it doesn't work all the time, right? Traders will try to find the breakout and they'll get stuck. You see what I'm saying? So what I would do if I saw something like this and I see it going up, this is called a market liquidity zone. This is called a market liquidity zone. You guys see this right here. Where all the wicks are, this is known as a market liquidity zone. This right here. This. Delete this real quick. You guys don't get confused. .8 is important. This is called a market liquidity zone, right? Where price, you see price is heading over to what? Heading over the high. Most people got on the sell, bang, impatient, not waiting for a correction, just getting in because they see the sell, bang, blown their account, blew their account. So market, look at what happens. The market, when you see a bunch of lines like this, when you see a bunch of what? Wicks, that means the market makers, right, could be potentially wicking up price, but more importantly, right, before they make the actual real drop, they're going to make sure that they can collect orders before they drop this pair. And guess where all the orders are? Right here. Right here. All the orders are right here. All the people, stop loss is right here. So what they'll do is they'll drop price, rise price up again, have everybody in disbelief, and have them believing, oh, I should have just gotten into a buy. And then they'll drop price. And then they'll drop, shift in momentum will come. And then another shift in momentum will come. So what you have to be keen on when you're having a stop loss, guys, is if you're trading around a daily or 4-hour zone and you see a bunch of wicks, you see, this is why I trade off the 4 hour. If I see things like this, I know that the market makers are not going to drop this. They're going to stop out all this liquidity, all these people, because what banks need to do is they can't get in trades just like us. They're in control of millions of dollars. They'll hedge themselves. So they'll buy crude oil, billions of dollars of crude oil, just so that they can sell billions of dollars of crude oil so they can collect all your money and then drop price. You guys understand that, right? You guys understand that that's fucking crazy. So around this area, around this zone, I'll make sure that I have either an elongated stop loss or I will not trade with a stop loss. And I'll make sure that I have an entry around the wick area. This is what we like to call a fuck you candle. This right here is a fuck you candle. This is a fuck you candle, okay? They'll do shit like this in order to what? In order to force you to believe that because we broke this out, price action, all traders are trading the same. Make you believe that, oh, we're going in an uptrend now. Now the impatient are buying. And guess what? Now we drop. So when you're around a zone like this or a big area, I would just watch price. I would watch what price is doing, and I would get in once I see further confirmation on the red candle. Once I see it dropping, that's when I get into the sell. Okay, I wouldn't be a part of this during all that. That's why I give the signals that it is that I do. Sometimes the signals hit, sometimes the signals don't, and it's because I'm putting all my entries around liquidity zones. Look at this. If I'm right here and I'm trying to establish where I want you guys to enter, right, where I want you guys to buy into this trade, okay, I am going to put price right around I'm going to put price around this area. This is another liquidity zone. I think price will actually rise probably to this area before it drops. Could happen. I could see it happen. I could see it hit a liquidity zone because there's a lot of people shorting oil right now. And guess what? My RSI looks like it still needs to go up before it drops. So this thing is going to do what? It's going to go up to this area. Then around New York session tomorrow, when the big news happens, then it's going to drop and it's going to create a lower low. Okay? It's going to create a lower low, hit the next take profit. That's what I'm looking for. Okay? Now, if I'm establishing, there's a lot of lines on my charts, guys. I'm sorry. It looks a little messy. Let me get rid of Fibonacci. Because what? It's also going around a 50% Fibonacci level. Okay? Let me get rid of Fibonacci here. I'm not going to talk about Fibonacci, but honestly, you draw Fibonacci from the last big trend. Okay? So like you see this? We're now in an uptrend. The last completed trend was a downtrend. So I draw the Fibonacci from the high to the low to figure out where it's going. And it hit the 50%. So I could see it, like I said. But let me get rid of some of this stuff because it looks dirty. I don't like a dirty chart. Let me clean this up. Go on the daily and clean it up, actually. Back. Okay. So what I'm predicting price to do, go up one more time. Go up one more time before I see a what? I'm trying to remove all this stuff. Before I see a drop. Okay. We can put our first take profit here, right, at the last supply and demand zone or a rejection zone. And our second take profit around, see, when in doubt, look to the left, around here. And I'm going to post this. I'm going to post this trade. Do you guys see how I saw that? You guys see how I found that? Yes or no? Stop loss would be around this zone. 60 pip stop loss for a 275 pip move. Does that not sound like a good way to trade? Huh? Accuracy is pretty high. We're up $430 right now. Let's go. Real account only. Demar, is there anything you're confused about? How have you gone through IML Academy? How long have you been trading, bro? If it doesn't click yet, I'm going to put up the recording. Maybe you need to go through the academy again. Oh, crap. I have to be out soon, guys. Okay, so I'm going to send out the signal. I expect U.S. oil. I expect to enter right around this area. Okay, I'm going to put a line on it. Around this area right here. Okay, the 58.42 before the drop happens. That's what I'm looking for. 58.42. And the last thing that I'm looking for, last thing, the bonus, okay, mark up correlating pairs. So now what I would do is, okay, if I see oil is going to drop, U.S. oil, let me look up what a correlating pair would be. Correlating pair would be, correlating pair, USD CAD. I would mark up USD CAD and see if I can see a buy on USD CAD. And that is how I would trade. So did you guys get some value for tonight? Did you guys get any value tonight? I'm going to upload it on my YouTube. Did you guys get value for tonight? Okay. Have you guys gotten any value? This is the strategy, man. This is the strategy that helps me flip accounts time and time again, helps me make a lot of money trading. I made all my money in 2016 off of trading, like $2,000, $3,000, $4,000 a month off of the strategy. Okay. It's kind of a lot. Don't get me wrong. You can obviously tell I've read a lot of books on trading. And honestly, dude, my biggest tip, my last tip, I believe that you can do anything. I mean, I said that I wanted to be a chairman 25. I became a chairman 25. I said I wanted to make a couple $1,000s a month trading. I did it. You want to know something? Yes, I do use Wyckoff theory. Yes. You want to know something, guys? I honestly believe that experience is the best teacher. It's the best teacher. Like, if you guys want to be better traders, find the strategy that works for you. Look at the confirmation charts that I was looking at. Find the strategy that works for you and trade every single London session for the next 5-6 months. Unless you're not willing to do that, you're not going to be successful. It's just the truth. It's just the truth. I traded London session. I lost sleep. Okay, I had pimples. I was losing hair. I traded every single London session for 5 months. Every single London session. Just like you know what my day consisted of? It consisted of me doing opportunity calls, launch calls every single day from 12 o'clock to 8 o'clock, 9 o'clock at night. After 9 o'clock, I would mark up charts and I would work all the way till 3, 4 a.m. in the East Coast. Then I would wake up, go to the gym, and do it all over again. That was my life for a year. Okay, people want to know the secret. People want to know how I made $42,000 a month. Highest month trading is like 6, 7 grand, right? That might sound like a lot to you guys. It doesn't sound like a lot to me. I made $42,000 marketing in a month, so it doesn't sound like a lot to me. But that is the key. You've got to just outwork and outperform yourself. Like, look at who you are right now. You have to outwork the person because the only way you're going to increase your income is you have to outgrow that income. You have to outgrow that rank. Just like I say it all the time. You want to hit Chairman 10, you have to what? You have to become a chairman, but more importantly, you have to outgrow Platinum 2000, outgrow Platinum 5000. You have to outgrow the person that can only make $1,000, $2,000 a month trading. You have to outgrow that person. That comes with time, effort, consistency, all that stuff. Every trader will tell you the same thing. Every trader will tell you the same thing. Go look at Ricky Valdez, because I've learned from Ricky. I've learned from Lex Waves. I've learned from Christopher Derrick. I've learned from Leon Davis. Personally, from almost every major trader that you could think of. I've learned from Chris Terry. They'll tell you the same thing. There's no secret. Are you willing to trade every London session for 5 to 6 months, maybe for even a year? Are you willing to do that? If you're not willing to do that, man, there's no reason you should even be on the call right now. Just the truth. Just the truth. Just the truth. I'm the type of guy that likes to be raw. I love being raw because I think that I needed to hear that when I was 18, 19 years old, because for me, that inspired me. I was like, damn, this fucking dude's making bread trading. He's making fucking bread. This dude's making bread marketing. And I was like, I always wanted it, but I realized early on that there was no secret. The secret was yourself. The secret was yourself, right? No question to it, guys. I appreciate every single one of you guys for being on here tonight. If you got value on the call, right, please tag me, or please go on my last Instagram post and drop some fire emojis, right? Everybody here has my Instagram, Don D. Guaman, right? And I'm going to talk to you guys soon. Peace.